Hello, my name is Martin Clayton and I'm a wealth manager at Swan Financial Consultancy. Swan Financial Consultancy specialises in inheritance tax and estate planning, but also pension and investment planning, specialist insurance, long-term care planning and mortgages, as well as business and financial corporate planning. And it's that bit that I want to talk about today, but on a slightly different level. The assumption is that financial advice just revolves around making money and distributing it out when you need it at the end. But what if you don't make it to the end? What if your business suffers in the meantime because there haven't been adequate protection put in place for unforeseen circumstances? I want to talk today about the different types of ways that you may need to consider protecting you and your business, whether you're self-employed or a large company, and also your employees. I want to ask some difficult but real questions to you as self-employed business owners, whether your company be large or small. Tell me, what would you do if one of your business partners died? Or one of your key members of staff were to die? What would you do if a member of your staff had a family tragedy, something that genuinely changed their lives? Or what would you do if you were unable to work? These may sound like hypothetical questions, but it's something that could happen to anyone at any point. And when it comes to a business structure, there are more people to consider. The risk enhances. I'm going to talk about a range of different solutions that could protect you, your shareholders, your business partners, your employees, should something happen to anyone in the business that would adversely affect it. Now, these policies all have different reasonings behind them. They'll be used for different things. It's not a one-size-fits-all, so please bear with me while I go through them. But it may well be that you need to look at this on a very much more personal basis. It's probably a question that you've never thought about answering, but what happens if you or a business partner dies? Well, without planning, a will normally be executed, if they have a will. If they don't, it gets a lot harder. But let's presume for this instance that they have a will. If that will says that spouses or children should inherit their estate, then guess what? Exactly the same thing is going to happen with their share in the business. And that then leads to you having to ask yourself a question. Are you prepared to work with the people that inherited that business? Would you be happy working with any of your business partner's spouses or children? And on that matter, would said spouse or children actually want to? Would they be interested in the business? If any of the questions to that were no, then maybe we need to have a think about a solution. The solution could be relatively simple, but what it does require is a few things. First of all, it requires a discussion whilst everybody is alive. It requires a discussion between all business owners to agree that they all want the same thing, to be able to sell to each other should one of them not be here to do it, so that family members do not need to get involved and shareholders remain the same. The setup of this is relatively simple. We need to create money from somewhere. The easiest way to do that is through a life policy, and by putting that life policy into trust, we can make sure that the right money goes to the right people at the right time and tax efficiently. There are a number of ways that you could affect this, but the one that we prefer is a cross-option agreement. There are many other ways, but we feel this one's the most effective. It can be used for any business setup, no matter how the structure is, and it gives surviving owners the option to buy and the representatives of the deceased the option to sell. Now, the important bit about that is that there are time limits to exercise those options, so it's really important that everybody knows that the option's there in the first place. This is particularly relevant for the existing shareholders who have 3 months to enable to buy the shares. Deceased estate have 6 months. It's their option whether they sell them, but generally speaking, these policies should be set up with the prior knowledge from all parties that this is the intent of the deceased business owner. Now, a common question we get asked at this point is why use a cross-option agreement and not just have some kind of buying and selling arrangement set up previously? The simple answer to that is tax efficiency. Whilst using the cross-option agreement and using the trust setup, it means that money doesn't actually need to change hands in the same way. It means that the whole structure allows the business to pass over without any kind of tax being raised. Now, you may think that that's the most common thing to come up when it comes with business protection, but actually there's another key thing that's not been mentioned yet. What if that person that's deceased wasn't a business owner, but was somebody else that provided profit for the company, provided business income, or even expertise? It's worth looking at a key person, looking at what used to be called key man insurance. A key person could still be a partner, could be a director, but it could also be a senior employee, a specialist, or a business owner. Generally, it is somebody who brings income in or expertise in that is going to have an adverse effect on the future income of the company. So how do we define those future loss of profits? Well, when it comes to key people, it could be a number of things. For example, it could be finding a replacement and training them. There's two outlays there. Finding the replacement means there's no income coming in. Training them is outflows. It could be covering for those sales in the first place. Even if there's no one to train, you've got to presume there's going to be an ebb and flow of sales. It could be the loss of key contacts. Was your specialist key person linked into certain social networks, into certain business networks? And it could just be loss of future capital as a whole. Of course, it's all well and good saying that you need insurance to cover somebody, but how do you actually work out how much insurance you need for a loss of a key person? How do you value a key person? There could be two ways. There are two common ways that people do it. It's either loss of profits or multiple of salary. Essentially, it's trying to work out how much you valued them before they were alive and also looking at how much they brought in before they were alive. It sounds morbid, but at the end of the day, it's important that the loss of one person doesn't lead to the loss of an entire business that's supporting many families. Now, this does come with a caveat with key person insurance. It has to be done correctly to be tax efficient, and it has to follow something called the Anderson Guidelines. Now, the Anderson Guidelines are very complex, and I'm not going to go through them now, but it's really important that if you are thinking of setting anything like this up, that you seek advice on it to make sure it does fulfill those guidelines. It's essentially a set of guidelines that make sure it was for the benefit of company losses, rather than just trying to get insurance payouts on all your employees. Speaking of employees, I'd like to talk about them in a bit more detail, and I'm not just talking about people you may deem key people, I mean all employees. As the business world has expanded over time, we've seen more employee benefits becoming standard for companies to attract the best staff that they can. And it's something that if you haven't got in place right now, could be limiting you anyway from a business front. But I just want to talk about them as a whole. What would you do if one of your employees was off long-term sick? Would you continue to pay them? Would you expect them to live off statutory sick pay? What would you do if one of their spouses had an illness? The same question applies. What if it was a children, or what if it was just a case of mental welfare? What if you could tell that the home life was affecting work life? More and more often now, we're seeing that home life and work life are becoming one. Emails are on your mobile phone, laptops are going home. During coronavirus, chances are that a lot of your staff are working from their living rooms. This is where employee benefits can come in. Now, there is a vast range of what you can do, and I'll talk about those in a second, but it's important to recognise that these are very specific benefits that can be provided by specialists. Now, we work with a panel of them, and you can see the providers on the screen right now, and each of them have their own benefits and perks that are different from each other. There are a range of benefits that you can put in place to make sure that your employees are covered in the event of unforeseen circumstances, and most of these will probably be quite reminiscent of what you might have as a personal policy. For example, group death in service, group critical illness, group private medical insurance, and group income protection. Now, With all of these, they all have different levels of cover available. It might be that you choose to put a death in service benefit in place that covers them for 4 times their salary. It might be that you want to put a private medical insurance plan in place, but know that that's going to be very expensive. There's cash plans available that are far, far cheaper. The important bit about it is that whatever you choose to do, you're insuring a group rather than an individual. So sometimes it can work out very cost effective to insure a whole workplace, even if you know that there are some staff in there that could be more prone to illness or long-term sick than others. The other benefit that these all have goes back to the mental welfare side of things. A lot of these providers are now putting in place employee assistance packages that provide counselling for financial well-being, mental well-being, or just general guidance on legal matters. All of these add up to one simple fact: it is a huge human resources benefit. And then finally, what about you? If you were to stop working or be unable to work, could the business support you, or were you supporting the business? This question is for every business owner, whether you are a sole trader or whether you are the owner of a 150, 200 people strong business. That question applies. It's really important to recognise that your own provisions need to be in place, even if you don't want to put them in place for your whole workforce. Now, we've spoken about shareholder protection, that's fine. But what about if you are off long-term sick? And once again, it may be that key person insurance could sort that, or it might be a simple sick pay policy, an income protection policy for your key members of staff works out a cheaper way to do it. The important bit is, if your business cannot supply you an income without your expertise going in, you may need to look at your own personal provisions. Likewise, if you're unable to work, how many members of your family are relying on that source of income? And then finally, let's flip it around again. What if your spouse or partner was unable to work and that suddenly meant that you had to spend more time at home, whether it be childcare or just looking after them? If the business can't support you, then there needs to be some kind of strategy in place to make sure that it can insure you. Once again though, it comes down to that key fact. What we've mentioned here could potentially be hours of financial planning, and I've just put it down into more or less 10 minutes. Financial planning is really personal and it's really important. So if you're a business owner, I stress to you one thing: sit down, take our time, and talk to us about solutions. And I'd urge you all, if you have a business plan, should this be part of it? Should it look at risks associated with key members of staff you might rely on, whether that be you or whether it be another employee? The important bit is to look at it, review it often, and make sure that there is nothing out of your control when it can be in your control. Anybody who's listened to this, pick our brains, ask for our advice. We are happy to give it. We can show you the solutions, but it's up to you whether you affect them.